Well, it's time for the business news now, and I'm joined in the studio by Anka Ulea. Hi, Anka. And we're starting with the Panama Papers. It's the first anniversary.
Yes, that's right. Exactly 1 year ago, more than 11 million documents from the world's biggest offshore law firm were leaked to over 300 journalists in 79 countries. These documents revealed an intricate web of financial corruption, implicating high-ranking politicians and celebrities who took advantage of offshore tax havens to hide huge amounts of money. The revelation triggered seismic regulatory shifts, with London and the European Union jumping to implement anti-tax evasion laws. But a year later, there is still much work left to do. A planned European blacklist of tax havens is still not approved, and tax fraud still costs countries huge amounts of money every year.
La liste noire européenne.
The European blacklist of tax havens is still blocked by Ireland, Luxembourg and the United Kingdom. Fraud and tax evasion cost the 28 states of the European Union 1,000 billion euros a year. And for France, the cost is between 60 and 80 billion euros. More than the income tax question, this is a matter of sovereignty.
Well, let's take a look at the US now, where Donald Trump has signed 2 new executive orders on trade.
Yes, he signed those orders on Friday. That's less than a week before his first meeting with his Chinese counterpart, Xi Jinping. He says it's to shrink the U.S.'s trade deficit and save manufacturing jobs in the United States. But it's also a message to China ahead of this critical meeting. Nadia Massey explains what the stakes are.
It was one of Donald Trump's key campaign promises to bring manufacturing jobs back into the United States. And to that end, he's ordered a study into the causes of America's trade deficit and to root out unfair trading practices.
We're going to defend our industry and create a level playing field for the American worker, finally. Today, I am signing 2 executive orders that send this message loud and clear, and that set the stage for a great revival of American manufacturing.
Administration officials will conduct a 90-day country-by-country study of the US's $50 billion monthly trade deficit, examining the effects of unfair subsidies and dumping products below cost. Much of this data is already publicly available, and attention is turning to the timing of the orders, just days before Trump sits down with his Chinese counterpart, Xi Jinping. Estimated at $300 billion a year, China is the biggest contributor to the US's trade deficit. But responding to Trump's initiative, China has argued that the trade imbalance between the world's 2 largest economies is structural, not political.
China doesn't intentionally pursue trade surplus. Neither do we intend to use competitive currency depreciation to boost trade. That's just not our policy.
Either way, Trump's tough rhetoric on trade has set the tone for the meeting between the 2 leaders when they sit down for the first time on Thursday.
And Anka, how are the markets reacting to that big meeting between China and the US?
Well, European markets are opening the week strong. We're seeing green across the board, with the Frankfurt DAX making the strongest showing at 0.4% in the green. Asian markets are also kicking off the week mostly higher after a positive report on Japan's economy. Tokyo closed this session up 0.34%. The Shanghai Stock Exchange was closed for the Qingming Festival. It's time to take a look at some other business headlines from around the world. Luxury electric car maker Tesla has exceeded all expectations on first quarter vehicle deliveries. It hit a new quarterly record of 25,000 vehicles sold, jumping 69% from a year ago. The company said that it expects to deliver up to 50,000 vehicles in the first half of 2017. Toshiba shares fell once again this session. We saw a drop of up to 9.4% on Monday morning in Tokyo, settling at around 5% in the red. This amid media reports that the company would miss another deadline for its quarterly earnings, asking for a 3rd extension on their report. Last week, shareholders agreed to sell the company's memory chip business after its nuclear unit filed for bankruptcy. And Switzerland's second biggest bank, Credit Suisse, is defending itself against a tax evasion probe the old-fashioned way. It took out 2 full-page ads in UK Sunday papers that said it has a zero-tolerance policy on tax evasion. The bank's offices in London, Paris, and Amsterdam were raided by authorities on Friday as part of a tax fraud probe.
And finally, from you, Anka, it seems people weren't exactly jumping at the chance to own one of Donald Trump's old cars.
That's right. So this is the first time that a supercar owned by a sitting U.S. president has gone up for auction. But sadly, Trump's bright red 2007 Ferrari coupe did not dazzle potential buyers. It was expected to nab between $250,000 and $300,000, but bidding on the car stopped at $240,000. The auction house later released a statement saying it was sold minutes after it left the podium for $270,000, but they didn't say who ended up buying it.
I wonder when that one's going to come out. Who would like to have the old car of Donald Trump? Anka Ulea, thank you very much for the run through our business news.